Hello, today we'll be evaluating PDD, Pinduoduo, and PDD is the parent company of Temu. So for those of you that don't know what Temu is, it has been one of these viral online marketplace app where you can just go on the app, you can buy stuff at exorbitantly cheap prices. So I remembered, for example, buying a drone there for £20 and it's very, very cheap. So you can think of it as something like an Amazon, but much cheaper. And some of you might think that the first concern there is, oh, this is another company like Wish.com, which sells ultra cheap products with horrible quality. But I've bought a few products from there. I can guarantee that the product's quality isn't as bad as it seems, and therefore I'm evaluating this company because as a user I really liked it and I would like to see whether it is a good buy or not. So the first thing that on how I like to evaluate companies is to firstly check whether it is a great company, and one way I could do that is checking its financials. So if I go over to Yahoo Finance, the first thing I would want to check is the income statement, where I can get its revenue and its income. And there's certain criteria I'm looking for. The first criteria I'm looking for in its financial statement is consistently increasing revenue, at least over the past 5 years. I could see 5 years ago it's 93,000 and now, 93 million, and now it is 402 million. Do note that this is CNY, that's why you can see the values are very high. So this is China's currency and not in USD. So consistently increasing revenue, checked. The next thing I check is consistently increasing net income. And if I go to income, I can see that its income is consistently increasing as well. So that's a plus sign. And the most important thing I like to check is the cash flow. Again, I can see the operating cash flow is consistently increasing, at least over the past 5 years. I can see it increases from 28 million all the way to 116 million. That's a huge increase. There's a minor bump here, but overall the trend is still increasing. So quantitatively, it shows very good signs. Next thing I want to check is qualitative assessment on whether it has a strong economic moat. So in this e-commerce industry, I would say PDD's moat is not as strong as I like it to be. So PDD operates in, you can think of it as two main jurisdictions. One's in China, the main operations, and the Temu, the subsidiary app, it's the rest of the world. In terms of China's competition, there are companies like Alibaba, there are companies like Taobao and others that sort of is eating, there are very strong competitors and it's eating into its market share. So I would say the economic moat on the domestic end for PDD is not very high. On the foreign hand, on the other hand, for example in US, UK, the main competitors are Amazon, and I would say Amazon is the main competitor. AliExpress could be a competitor, but not as much. So in this overseas domain, there is slight competition because I would say that Amazon and Temu offers very different offerings, because Temu is much cheaper prices than Amazon's, and I could say Amazon's much better quality. So it sort of targets two different kind of customers. So not as strong competition, but still strong because of its very low prices. So with this qualitative and quantitative assessment, I can sort of conclude that Temu is a good company. The next thing I want to look is to calculate its fair value, because no matter how great a company is, if it's trading at a wrong price, if it's too expensive, it's not worth it. So I will use a discounted cash flow calculation to calculate its fair value. So the first thing I would do is I'll populate this discounted cash flow calculator that I have using values from Yahoo Finance. So I'll populate the cash flow, I'll populate the total debt, which I can get from the balance sheet. I'll populate the cash and short-term investments, again I can get from the balance sheet. To get the cash flow growth rate for 1 to 5 years, I often use two sources. One is Zacks.com and one is Finviz. So I go over to Zacks.com, I can see that the expected EPS growth, I'll take this, is about 9.22%. And for Finviz, it's about 6%. So typically you would take the average, but because I'm a conservative investor, I would take the smaller value, so 6.02%. And the 5 to 10 years, 6 to 10 years will basically be half of the 1 to 5 years, and the 10 to 20 years again is the half of the 6 to 10 years, and that's how I get the three values there. The number of shares outstanding, I can again get it from Finviz with beta as well. And this gives us an intrinsic value of 1,612. If you think that's a bit high, it is a bit high. And like I mentioned before, the reason why it's high is because the currency is in Chinese yen, whereas the stock price is trading as USD. So I would want to convert the intrinsic value into USD, and to do that I can just take the exchange rate. So the exchange rate is basically 1 Chinese yen is worth 0.14 USD, and I just multiply it by this, I get a value of 225 USD. So that's the intrinsic value. The current market price is 103. So as you can see, it's almost 100% undervalued. And why it's undervalued, I'll now go into the concerns on why people undervalue this share so much and whether this undervaluation is justified. So the first concern in current macroeconomics conditions is tariffs. So if you know, Trump has launched a lot of tariffs, and China is one of the biggest recipients of one of the highest tariff rates. As it stands, it's currently 30%, and this would definitely affect Temu because US is one of the largest markets that Temu is selling its products to, besides China. So that's the main concern. Is it something that I'm concerned about? Yes, I do think that even though after Trump, the tariffs might be removed in the next president's era in 2 years, but this is still a minor concern. It is a minor concern. The second more major concern is something called the de minimis rule. So in the past, this de minimis rule means that parcels below a certain price value that don't get taxed. And so basically, these small parcels traveling from Temu in China all the way to consumers in the US and Europe won't get taxed on it. But because people think this is uncompetitive to local domestic suppliers where they have to pay tax, they are trying to remove this de minimis rule. US has removed it, Europe is going to remove it, and this would mean that these parcels would then have to pay tax. So again, this would lead to an increase in costs of these products. So not good news, because that would mean decreasing profit margins in the future. The last and third most important risk factor, I would say, is that there's a lot of rumors about fraudulent accounting in the company. So if you go and read about it, there is Grizzly reports, and there is also the Blue Orca Capital report, which says that Temu is overstating its revenues through various means, but also its accounting financials being a black box. So if you're outside of Temu, you can hardly know or trust what's going on with its financial statements. Is this concerning? Yes, very. Why? Well, the main reason is my entire valuation, especially the DCF, the discounted cash flow valuation, is based on its financials. And if I can't trust its financials, then how do I know what the actual fair value is? So to summarize, tariffs, is it concerning? Yes, it is. Short-term wise, I will probably give a 5 to 10% buffer on the stock price. The second, a de minimis rule. Is it concerning? Yes, very. I would put another 20% buffer on it, so total 30%. And lastly, the fraudulent accounting. This, I would say, is a major red flag for me, and because of this, if I can't trust it, it makes me question whether my entire valuation is legit. So because of the third reason, I would say that it is not an investment for me, but I might put a small portion of my funds just as a speculative investment. So let's say if you normally invest 1,000 a share, I'll only probably put like 200, 300, a very small percentage, because this is going to be a speculative investment for me because of its very undervalued valuation. And that's only assuming that those rumors regarding accounting financial fraud is fake. Again, those are rumors. It might or might not be true. I'm scared because rumors doesn't just appear out of nowhere. But in the event that all the financials are true, then this has very high potential upside. But for now, I'm only going to put in a small speculative investment amount. Thank you.